What is going on YouTube? It's Sank and we are back with another one. Now in this drop, coming at you guys with a couple of plays and a bring to attention. But before I kick things off, if you'd like to help out the channel by hitting that like button because it keeps the show rolling. Alright guys, so that wraps up another day in these markets. Now in this one, I'm coming at you guys with a couple of double up potential plays I want to put on your radar to ensure that we continue to hit success as we move into the second half of the season, guys. So as always, in this one I've got a jam-packed on for you, so do make sure you stick this one all the way through for me. Let's run the first one. So we're going to kick things off with ticker symbol HITI, that's high tide. Now I already chopped this one up with you guys in the last drop, but in this one, I want to run a few additional bits of intel by you. Now, we closed up the day, put about 1.5 points on the board. You'd think it was just a normal day of trading for this one, but we know they had a blowout quarter, revenues growing 100%, business firing on all cylinders. The market is just overlooking and underappreciating this play right now, so it is a double up play we have on our hands. Now, there's a few things about this one I haven't really spoken to you guys about, and one is the growth in their e-commerce, okay? E-commerce is new in the industry and High Tide is just going to take full advantage of that growth. They're well positioned to do so, so expect a lot from this play and potentially acquisitions in the space as well. And also, if we get any more relaxed regulations, that's going to play into their favor, allow them to expand and move into different states. As I say, just scaling and increasing the business. So there's tons of things in the pipeline, along with other acquisitions, open up retail stores, which is again, just all part of the longer term growth story in this one. Now, in terms of how we make entry, guys, check out my average standing $7.67. So if we hit some volatility over the next couple of sessions, over the rest of the quarter, I want you guys to take full advantage of a weaker stock price in this one. So anyhow, you guys get this one closer to my average. Ensure that you guys, if you haven't already got exposure to this one, build your exposure in this play, okay? And do feel free to dollar cost average down on this one if you catch this one at a lower price than your current average price. So as I say, in these markets, it's all about moving strategically and thinking ahead. If you guys are just able to hold, ignore the noise of volatility in this one, you will be rewarded. As I say, I've still got my $15 price target on this one as we close out the year. Let's get to the next one. The next one I've got for that ticker symbol BGFE, that's Big 5 Sporting Goods. Now I'm gonna let you know the move here, but I want you to know some of these retail plays are positioned to win in the second half of the season because consumers are sitting on disposable income and there's that move to get back to normality. Now we have retail plays in our portfolio already hitting success on, like a Revolve. BGFE are coming from a different angle, the sports side of things. And our plays like a Nike came out, smashed earnings, so it shows you the demand is there. Now as all these sporting events pick up, as I say, and there's that transition back to normality, I'm expecting this one to do well in the next couple of quarters. Now check this one's on a major dip off their highs of pretty close to $40. So this one's sparking my interest, but they're not yet ready to be picked up. Ideally, this one is better at 21 or below, okay? So once they get back to that normal trend that they were on before they were overextended, better entry can be made at that point. You guys know it's all about moving strategic in these markets. Just because this one's on a dip doesn't mean it's ready to be picked up. So as I say, under $21 is where I'm looking at. Now, if this one doesn't drop to $21, guys, you don't have to catch every play in the market. Okay, we'll just move to the next winning play. There's tons of opportunities out there in the stock market, and you guys know I bring them to you on the daily. So if we catch this one under $21, we can consider making entry on this one to take them back up to that $40 mark off the back of a good couple of quarters as we move through the season. Let's run the next one. The next one I've got for that ticker symbol BCRX, that's BioChrist Pharmaceuticals. Now this is one of the veterans in our team who've already hit major success this year, one of our smash hit plays. But you guys know these plays still have room to climb, but they're going to hit short-term volatility, and it's an opportunity to take advantage of that. Speaking of which, this one's come down from their highs of over $17. Right now they're trading in the mid-15s. They've dropped because a competitor in the game has released some good results. But guys, this is a move you'll see time and time again in these markets. It doesn't mean that it's going to change the course of this play, okay? They're still on course to hit major success in their industries. We know this one's on that international expansion growth. Israel was the last place. They've already got Japan, UK, Europe, the US, and they're just rolling out at the moment. So this one is firing on all cylinders despite the short-term headwinds we've seen in that stock price of recent. So The move here is that entry can be made, but you guys ease yourself into the position in case there is any further weakness in the play. So this one can drop through the teens, can drop to 14, can drop to 13. You guys need to be ready to pounce on those types of share price numbers if you do catch them, because this is another double up play, and I make sure you guys are aware of. This is the play just getting started. Their last financials was an absolute blowout, but they just accounted for their US sales. When they post up their next one, we're going to see the international moves that they've been doing. Okay, so this one is going to cause another analyst surprise, and you are going to see that increase in that stock price as we transition through. Now in terms of timing for double up, this one won't double up this year, guys. I've got my eyes set on next year for this one to double up. So those taking that medium term outlook on the play, you will be rewarded in this one. But you guys know, throughout the lifespan of this one, throughout its journey, they are going to hit periods of volatility. You guys just got to take advantage of that. But as always, I'll give you guys a heads up. So this is another one on my radar to hit that double up for the family. So if you've been rocking with the channel, you know what time it is. Great plays as always. What are your thoughts on Caesars Entertainment? I bought in at $102.5, thinking about adding to the position, or would you diversify with something else like BCRX or DraftKings? So to wrap this one up, I want to share some of you guys. Now you touched on a good couple of talking points for me, and the first is going to be diversification, because I want you all to move correctly in these markets. Now typically I don't hold more than 2 plays in the same industry, and they'll bring something different to the table versus each other. So when it comes to streaming, I've got my Roku, I've got my Disney. They bring different things to the table. When it comes to biopharma, for example, got my BCRX, BNGO. When it comes to mid-size retail, that's Revolve and Lovesac. Now, the reason why I say no more than 2 plays in the same industry is because it will allow you guys to be strict with what plays you bring to your team. Now you guys know it's all about adding quality to your portfolios. This isn't a spray and pray type of situation. We want the best of the best with the best drivers. So as I say, it's all about adding quality, high conviction plays to your portfolio only. Now in terms of Caesars, if you guys aren't clued up on that one, that is a old school gaming gambling play, rich portfolio casinos that will benefit off the back of the reopening trade. Their casinos are about to see a lot more footfall, so they will post up solid Q3, Q4 numbers, driving up that stock price. I'm expecting them to close out $130, $135. So there's good upside on that current stock price. So as I say, if you haven't done so already, do check out that play. Now in terms of diversifying DraftKings versus BCRX, obviously DraftKings is in the same industry. DraftKings do have a much greater online presence, so they do bring a bit of diversification in that sense. Now the obvious one to diversify would be BCRX, okay? So they bring a whole different dynamic to the portfolio, different drivers, different sector. So that's the one to go for if you're looking to diversify in this instance. So alright guys, so that wraps up for this one. If you've got any questions for me, drop them down below and I get back to you. I want to say I appreciate you guys. On your way out, do like that comment section for me, and if you're new, join the movement, and I catch you in the next one.